In this free video course, I'm going to show you the basics of chart patterns for trading stocks, forex, cryptocurrencies, or pretty much any market you want to trade through a price chart, since these patterns are universal, so they are applicable to all markets and all time frames. In this course, you're going to learn how to identify the patterns, the classifications between reversal, continuation, and neutral patterns, and also the classification between bullish and bearish patterns. We're also going to study the logic behind each pattern and different ways to trade them. At last, we're going to make some conclusions about the use of chart patterns and explore some advantages and disadvantages of this trading technique. The goal of this course is to show you the reality of using these patterns, which is something that most trading educators tend to purposefully ignore. Right from the start, I can say that I'm not a fan of these patterns, but I want to create a reference for people to learn the advantages and the pitfalls. So that's why I created this free course. I believe it's a good idea to learn these patterns just for the sake of understanding their limitations. Before we begin, you should understand that this video, just like any other content you will find on my channel and website, is for educational purposes only. This is not investment advice. Trade at your own risk. With that said, let's begin first by talking about how to classify the chart patterns. The chart patterns classification works a lot like the candlestick patterns classification. If you don't know how candlestick patterns work, I have a free candlestick patterns course you can check out in the YouTube card. There are basically two ways of classifying the chart patterns, and they add on top of each other, as we'll see in a moment. The chart patterns are classified by direction and type. Let's begin by studying the first classification, which is the direction of the chart pattern. The direction classification relates to the direction that price is supposed to go after the pattern. Since we are talking about price charts, there are only two directions that price can go, meaning that it can either go up or it can go down after the pattern. When the chart pattern implies that price will go up after the pattern, we classify it as a bullish pattern. When the chart pattern implies that price will go down after the pattern, we classify it as a bearish pattern. Beyond the direction classification, we also have another type of classification that adds on top of the first one, which is the type. There are three types of chart patterns: the reversal patterns, the continuation patterns, and the neutral patterns. The type classification tells what's going to happen with price after the pattern in relation to what was happening with